Disclaimer: all my videos are for educational purposes only. I am teaching and explaining investment trading to everyone, but I am not giving out any advice. All investments are subject to market risks, so please evaluate carefully before you invest, as you may lose your investment.
Hey guys, welcome back to a new episode. So in today's video, as I had not mentioned in my previous video, I had told you that I'll keep it a bit of a surprise. So today I'll reveal what I'm going to be talking about in today's video. Are you ready for it? Okay, enough of the theatrics. So in today's video, I'm going to be talking about a really interesting and intriguing area of stocks, which is known as shorting of stocks, which I'd already talked about a little bit in one of my previous videos, which I've already kept the link in the description. So today I'm going to talk about what exactly is shorting of a stock, how does it all work, what are the pros and cons, and basically explaining this entire area of shorting of a stock, because it's something which not a lot of people understand, because you can lose a lot of money, you can make a lot of money, and it's very technical. So unless you actually have a good grip on it, you can't really master this area. So I thought might as well break it down and explain to you guys what this entire area is, how it works, and things like that. So today's video is going to be all about that. So let's move on right ahead first, and let's talk about what exactly is shorting of a stock. Hold on guys, so now before we move on to shorting of stocks, I want to give another quiz round. So in today's quiz round, I want you to figure out that when March 2020 had started, a certain person had actually thought that because of COVID, the impact on the stock market is going to be tremendous. It's going to be a tremendous crash. He had predicted that, and so he took how much ever money he had, which was something in the millions, and he put that in and shorted the entire market just at the start of the COVID-19 pandemic in March 2020. And when he did that, he turned some amount of millions into billions. So I want you guys to find out, research, and comment down below on this video that who was that person who actually was able to analyze everything and actually understood that this COVID pandemic is gonna involve a crash in the stock market, and he was able to convert a certain amount of millions into billions of dollars. So do comment down below in my video and let's see who gets the answer. So I want you guys to figure out who was the person, how much did he put in, and how much did he get out of it. So all three of them. So let's see, let the games begin. So now let me tell you a little bit about what exactly short selling is. So to give you a perfect example, let me remind you of the character of Wimpy from the Popeye comic strip series. So he is the perfect example of a short seller, as if you may remember, he was very famous for a line which went that he would gladly pay next Tuesday for a hamburger right now. So essentially, short selling is an investment or trading strategy that bets on the decline of a share or another asset's price. So this is a very advanced strategy that only should be undertaken by very experienced investors or traders. Now, frankly, even I don't do this, so I'm not in that category, but only very experienced investors or traders should actually undertake this. Now, in short selling, what happens is that a position is created when you borrow shares, and those shares are maybe of a company or other assets which the investor or the trader believes will decrease in price. Now, once they borrow those shares, they sell it to a buyer willing to pay the market price at that time. Now, what happens after that is that before those borrowed shares have to be returned back to the original person, the investor or the trader is willing to bet that the price of that share or another asset will decrease even more than what it is now, so that they can buy it at lower cost and make the profit on the difference. So in a sense, that is how short selling works. They basically sell high and then buy low, which is counterproductive to what normal trading happens, is where you first buy low and then you sell high. So they are basically doing the reverse. So now hopefully you've understood a little bit about what short selling actually is. Now let me explain to you how it works by giving some examples. So now let's understand this entire area of short selling and how it actually works. So now let's assume a trader imagines that some company XYZ, whose share price is currently trading at $50, it will decrease in share price in the next couple of days. So what the trader does is he or she borrows 100 shares and then sells it to an investor or a trader. So now the trader has actually sold 100 shares, which actually he or she never had in the first place. So thus he or she is actually short 100 shares. That's how actually this entire concept of short selling came about. So now let's assume that in a week maybe the company share price decreases down to $40, let's say, right? So the trader can now buy the 100 shares back at a lower price and thus return that borrowed sum back, as well as he's already made profit on the difference of selling high and then buying low. So he totally makes $50 minus $40 times 100 shares, which is $10 times 100 shares, which is $1,000. So by doing this shorting, he's actually made $1,000. So now let's see a counter scenario which is always present, that what happens if the company share price actually increases. So let's say in this counter scenario, the company's share price actually increases to $75. So now the investor or the trader was forced to buy the shares more expensive than what he had actually sold for. So thus he makes a loss, and the loss is basically $50 minus $75 times 100, right? Which is minus $25 times 100, which is minus $2,500. So he lost $2,500 because he assumed that the share price would go down, but actually the company's share price increased and went much better than what was expected. That is why shorting of a stock is very risky. Now I'll explain in my next and final segment how exactly is the pros and the cons of short selling versus long-term investing actually weigh out. So now let me explain to you pictorially the risk versus reward factors for shorting of a stock versus long-term investing. So now let me give you a basic scenario and then explain it. So let's give a basic scenario that a share price is at X dollars, let's say, right? So now when you check the risk versus reward, so in shorts over here, the risk is that the share price can actually increase exponentially and constantly go upwards and upwards. So basically there's an infinite amount of downside, right? Versus the reward is that the share price hits absolute rock bottom zero, because that's the maximum a share can drop down to, right? Every share has to go down only to $0. So, and that is just 100% upside, which is how much you've invested. That much upside you can make, right? Now, when you look at long-term investing, then the risk is that the share price can go all the way down to $0, and thus you make 100% downside, versus the reward is that it goes exponentially up all the way to infinity, so you make infinite amount of upside. So basically shorting and long term, they are like complete reversals. Okay, now before we end this video, I just want to give a small information about something which has come in the news quite recently. So there is this concept, something known as short squeeze. So short squeeze is that, let's say that an trader has assumed that XYZ company is gonna go down in its share price, right? So it does its shorting of the stock, right? So it buys at a certain price and hopes that it goes down. Now what happens is that sometimes some people actually analyze this and they figure out that, okay, this certain person or this certain group of people have actually shorted the stock or are wanting to short the stock. So what they do is to just piss them off or to make money their side and make sure they lose money. What they do is they pump in money into this company and constantly buy shares, right? Thus increasing the stock price way more, right? And now by buying all these shares, now of course, since the trader has actually sold the shares first, he needs to buy it back, right? So now by buying on this side, all these long-term investors, they've bought a lot and they've not only increased the stock price, but they've reduced the amount of shares available to buy, and thus it creates a squeeze on those short sellers who need to buy now. And so it becomes a vicious circle basically. So now they have to buy so that they can cover up their loss, and these guys are also buying, so they buy, and then these guys buy, and the share price constantly increases, benefiting these guys, the long-term investors, but harming the short sellers very much. Now, if you've seen in the recent news in January and February of 2021, GameStop and AMC, two companies, they were the biggest benefactors of this entire tussle. So this is something I wanted you guys to know, because short squeezing has now become really interesting and really, how to put it plainly, a pain really for short sellers as well as for long-term investors, because now retail investors, like normal people like me, you, or anyone, we don't know which side we can ever end up on. So it can really harm us in the long term. It can harm the long-term investors as well. It can harm the short-term and short seller investors as well, all of them. So it becomes a very jazzed up environment, and thus short squeezing really is a really intriguing notion. So I just wanted to explain that. Hey guys, I take your leave here now. So I hope you really enjoyed this video about shorting of the stocks and understanding this entire concept, this entire area, what exactly shorting of a stock is, how it works, and all of that, and as well as short squeeze. I hope you enjoyed the little bit of pictures I put in. So I really hope you enjoyed this entire video and you learned a lot about this entire area. So now my next video is going to be about another concept about how you can trade in the stock market, which is known as day trading. So I'll be explaining what day trading is, how it works, all of that, and how it compares to long-term investing. So I'll be explaining all of that in my next video. So until my next video, take care, stay tuned, thanks for watching, and I will see you in the next video.